In a fast-moving market, you have to know what's working. You must. With Nielsen Ad Intel, you'll know the wheres, whens, and hows of advertising across industries and channels. Maximize your ROI and achieve better results. Stop guessing, start winning. Nielsen Ad Intel. Hey gang, it's Monday, November 3rd. Ross, Danny, and listeners, welcome into Behind the Numbers, an e-marketing video podcast made possible by Nielsen. I'm Marcus, and joining me for today's conversation, we have senior analyst covering digital ads and media living in the Westchester vicinity. It's Ross Benish.
Hey, Marcus.
Hey, fella. Also, a little further south in Brooklyn, joining us, we have the editor of the Marketing and Advertising Briefing, our Marketing and Advertising Briefing. It's Danny Konstantinovich.
Hello. Yeah, actually in Queens now. So still a little bit south of Ross, but you got to get it right.
I know. I never listened. I also gave him the wrong title before we started. I don't know you at all, Danny. His name is also Daniel. Nothing about him is true. Today's fact. How much time do we actually spend watching things happen during a football game, American football? So I'll ask you guys. There was a Wall Street Journal analysis of an average game of football, and it lasts 3 hours and 12 minutes on average, total time from starting to watch to end of watching. But if you tally up the time when the ball is actually in play, the action amounts to how many minutes?
17.
Oof, that's pretty low. I was going to guess like 30, but
Okay.
I also don't watch football, so I have no reference for this.
11.
Wow. Oh
Just
my, I mean,
11
that's crazy.
minutes. An average play in the NFL lasts just 4 seconds. And Ross, you would have been right if you'd said the average NFL broadcast spends 17 minutes on replays. Watching replays, which is obviously more. You spend more time watching replays than the actual live game. 75 minutes are spent watching players, coaches, referees basically loiter on the field. It's just shots of them walking around. And the average NFL game includes 20 commercial breaks containing over 100 ads and that take up a total of 1 hour of viewing time.
Wow. Well, I guess we need all those shots of the refs walking around the field because they're all so jacked and muscly. They're all so strong. I don't know what they're preparing for, but
some kind of
maybe I should be too.
Well, this is why you have to go to like Buffalo Wild Wings or something like that, where they have a bunch of games going on simultaneously.
Yes.
You can,
Thank God for
So
red soda.
you can go from game to game and see maybe might see an hour's worth of football if you sit there all day and watch 100 games. Who knows?
I bring my book
A
to the
whole hour.
bar, and people have said to me, like, why are you bringing your book to watch football? And this is the reason, because nothing is happening most of the time.
And yet,
especially during a review, like if they review a play, you can probably read half a chapter.
Yeah, you can get through quite a lot. Anyway, today's real topic, the biggest questions surrounding Netflix in Q3 and beyond. All right, folks, we have a new format for you. And in this episode, around this time, earnings season, we cover the big tech giants and see how they're doing, look at their financial performance, other things that are going on with the company. But we wanted to focus a bit more on the biggest questions surrounding these companies. So we'll have the usual suspects coming up over the next few days, Google, Meta, Amazon, etc. But we'll be asking what are the biggest questions surrounding these folks, focusing a little bit less on the performance. We'll still talk about the earnings, but in the context of these big questions. So I have a list of 3. We're going to talk about those, but Ross and Danny might disagree. Maybe there are other things that they think are should be at the top of this big 3 questions list. The first one, though, gents, I want to reference our briefings writer, Marissa Jones, noting that Netflix said it's on track to double ad revenues this year, claiming Q3 was its strongest quarter yet for ad sales. Ross, we'll go to you first. What stands out the most at this point regarding Netflix's ad business?
That they've expanded live sports considerably. It went from just like hot dog eating competitions to like the occasional boxing match, but now you have like some NFL games. You have a little bit of Major League Baseball coming up. And I think when more rights come up for renewal, they will be a bidder. they've shown that it's not quite so experimental. It's something that they said they wouldn't get into years ago, but clearly they have ambitions in live sports, and the reason they have those ambitions is to grow the ad business.
Yeah.
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 And they also said they would never get into advertising years ago, and here they are talking
Yeah.
about their ad business.
Yeah.
Well,
If
there
they
you
say
go.
they're not going to do it, then they're going to do it soon. That on the sports piece, I didn't realize this fight had happened. Partly because I'm not a boxing fan. But Netflix aired Canelo versus Crawford boxing match September 13th. That drew an estimated 41.4 million total viewers worldwide, making it the most viewed men's championship boxing match this century. It also had live attendance of over 70,000 people, which broke the records for Las Vegas's Allegiant Stadium. But
Well,
yeah,
it's easy to like sports. Boxing has been a pay-per-view model. So like when Floyd Mayweather had his big bouts, even with Canelo, who was one of the fighters in this particular fight, people were paying like $70 just to access it. So the fact that a match of that magnitude is on Netflix, it was bound to break it, because premier boxing matches aren't on. They're not even on cable TV. Like they're on a pay-per-view model. So the number of people was always kind of low. This gives it a much bigger platform. And Crawford, I mean, he'd be an American icon if this was the 70s, but boxing's popularity has declined quite a bit. Most people don't even know who he is.
Yeah, I was not familiar with him, I have to
Do you?
admit.
Yeah, no, I've heard the name, but never watched him
Undefeated.
before.
He's gone up and down weight classes. Can't be beat.
So, I mean, this was a high-profile match anyway, so that would have pulled in some
Oh
viewers.
yeah, it would have been a big pay-per-view if Netflix wouldn't have had it.
It's a good point, though. Do you think that when some of these sports rights come up for renewal, that Netflix might get preferential treatment because it can reach this many people all at once? I mean, it's one of the biggest platforms video-wise outside of YouTube. So do you think that there's a good high likelihood, like if you had to bet money, that they'll get one of the top 4 major sports, NFL, NHL, NBA, MLB, when the next rights come up?
Well, I think a lot of it's on what the price is that they bid on. Formula One, for instance, went with Apple TV because Apple TV paid the most, but they're not delivering the biggest audience,
right?
Whatsoever. Like if you look at their MLS games, MLS on Apple TV has gotten far fewer viewers than it had on ESPN and on Fox Sports previously. So, like, I think it depends on the league. If they just want revenue now, a lot of them probably won't care that much. But you do make a point, like if you're looking to like gain viewers and expand your sports reach, Netflix and Amazon are like very attractive for that reason.
Yeah.
So I could see it happen, but they'll still have to. They'd still have to come in with a pretty sizable bid, even if they have that platform.
Yeah, and I think what Ross is mentioning is part of why the WWE saw Netflix as such an attractive partner. It's a bid to increase the popularity of the sport with Netflix viewers, which is the largest streaming service in the US. In a way, to Ross's point again, that a service like Apple TV, probably couldn't provide. So I think that will make Netflix an attractive option. But I think that the sports rights picture has gotten a lot more complicated. I think that these leagues have really shown a desire to split up the rights among several services. Because you're getting more money coming in from those various services, and you have things like ESPN and the NFL partnering to some degree that could influence where rights for the top ticket sporting events go.
Well, 2 things really quick. The first thing is I wondered if for the viewing experience that might change, that they might prefer one rights holder over one platform over another, because viewers are going to get frustrated. But I saw that I think it's the NBA. Then now, if you go to NBA.com, you can click on the game and it will show you kind of like Just Watch, but it will show you which platform that game is going to be on, and then if you're signed in, it will take you straight there, or maybe it will ask you to sign up for a subscription.
That's a helpful feature.
Yeah,
but like, it's crazy that you need that feature.
It is. It is. Yeah. So it seems like this is going to be the future, because to your point, you can have them bid against each other, and it makes more money for the sports franchise to do it that way. But we mentioned we're talking about Netflix viewers. The ad-supported viewer base for Netflix come out of nowhere, projected to reach 48 million this year in the US. That's up from 40 million last year, and just 8 million in 2023. So our forecasting team expecting it to be 20% of Americans in 4 years' time are going to be ad-supported viewers on Netflix. So it's a big audience, even for the
Yeah.
ad-supported folks. Danny, what about for you? What jumped out to you the most regarding Netflix's ad business?
For me, I think programmatic ad buying has been a
Mm.
really interesting development for Netflix. This year, we've seen them make a big push into expanding programmatic ad buying access across the world in, I believe, 12 major markets. And it seems like this has done fairly well for them. I mean, it's opened up an easy channel to buy ad inventory on Netflix. It's bringing new advertisers into the fold. I think that there will always be an interest in advertising on Netflix as long as it remains this leader of streaming and this household brand name. So I think it helps it keep churn relatively low. It is synonymous with streaming in a way that, you know, Disney Plus or HBO Max are just not.
Mm-hmm.
And when consumers who, especially in the US, are facing some, staring down some tough economic conditions in the next, you know, foreseeable future, I
Mm-hmm.
should say, uh, if they start making some tough decisions about, you know, what entertainment costs do we cut, they are likely to hang on to 1 to 2 streaming services, just based on how consumer behavior has kind of shifted around streaming in the past during concerns about inflation and other economic pressures. So Netflix is, you know, less likely to be hurt by viewers cutting costs, cutting streaming costs rather.
And they just, I mean, they also just have so many hit shows and or TV shows and movies. It's not like they're resting on their laurels and just hoping that that brand recognition will kind of continue to propel them forwards. They've got, you know, multiple seasons, not final season of Stranger Things. They've got Squid Game season 2. They've got NFL games. Ross, I think alluded to earlier, coming out at Christmas. Like they're still pushing the envelope when it comes to content. K-pop Demon Hunters, which I kind of just not dismissed, but didn't really think much of. And then I come to find out that it's their most watched film in Netflix's history, 325 million views. That would be basically everyone in America. If it was all unique, if it was uniques, 300 million people watching that, and also hit the top of the box office. Its release weekend as well. So do we agree with this one being one of the biggest 3 questions for Netflix at the moment? This question around their ad business, does that stay up there in the top 3? Do you think?
Yeah, I
Okay.
think so.
Okay, Ross, agree. Top 3.
Yeah, it's you know, aiming to be their second big revenue stream. It's mostly still coming from subscription fees. So
Yeah.
you know, if they're trying to diversify, advertising's the best shot, and that's where they've put the most effort and gotten the most attention. So
Yeah.
I think it'll be a top 3 question um, for the next several quarters repetitively.
Mm-hmm. I'll just keep this script then. We'll just
There you go.
see
Just
in Q4.
call me up in 3 months. We'll say the same thing.
Yeah.
And we forecast that it's going to be about, you know, they don't break this out, but we think it's going to be about over $2 billion business this year, in a year or two, a $3 billion business. That would be about 5% of its revenue. So it's not nothing. And to what Ross is saying, like they're trying to make it more significant line item. Okay, that's one for one then. My second big question, I think, is around Netflix House. It's the video streaming giant's new physical location, or locations, I should say, where folks can engage with popular Netflix shows and movies through immersive experiences, including VR, themed food and drinks, and exclusive merch. Jennifer Mars of Variety explaining that the permanent entertainment and shopping venues will be free to enter, but the majority of the virtual experiences and hands-on activities will be ticketed offerings. The first one opens in Philly at the King of Prussia Mall November 12th this year, and then the second one opens in Dallas at the Galleria Dallas December 11th. Danny, how big of a deal do you expect these new Netflix House locations to be out of 10?
I would rank it fairly low. I maybe like a 4 to 5. I'm not so bullish on this development. I think that it's certainly not a bad move for Netflix to make. I mean, there is a large amount of spacious, cheap mall real estate available for them to launch locations like this, and I think that it helps strengthen the Netflix brand as this kind of all-encompassing entertainment brand, a family friendly entertainment company. You can bring your kids to the Netflix house. It reminds me sort of like a Disney theme park esque experience, but
Yeah.
with obviously much lower operation costs,
Yeah.
presumably, and returns as well, most likely.
It's kind of like Disney Store meets Disney theme park.
Yeah, I think that's a
Mhm.
great way to describe it.
Ross, higher than 4 to 5 out of 10?
No, I'd give it lower than that. Like
Oh,
I'd give it more like a 2 to 3 because I think it's a nice marketing
Mhm.
ploy. This is a nice way to um, push like their brands. It's kind of like the tie-ins they've had with Dunkin' Donuts and various other things. When Stranger Things was a newer show, um, I just don't see this being a gigantic revenue generator that it's something that analysts or investors are going to be focusing on every quarter. It looks like
mhm.
it's just like a nice to have little feature to promote your product.
Okay.
Yeah,
Is
and at the moment, it's also just a small handful of locations. So
right.
it's not like this is a massive nationwide rollout of Netflix retail locations.
Nope. And
Yeah, this
slow
isn't,
rollout.
it's they got a long ways to go before this would be like a segment, like the way
Yeah.
Parks is for Universal or
Mhm.
for Disney.
Yeah.
Like this is just like such a smaller scale.
Yeah. Yeah, the rollout's slow as well. I think they're gonna have a location in Las Vegas next, but that's 2027, and that's gonna be
Mhm.
the third one. But I wonder if they're probably looking at this as like a loss leader, like, kind of flagship store on, Michigan Avenue
Madison Avenue.
Or Madison
Oh,
Avenue,
Fifth
yeah.
Avenue. No,
Well,
Fifth
I was
Avenue would be in
thinking
New York, right?
Chicago, and
Yeah,
then, yeah,
Chicago.
Fifth Avenue for New York. Like, this is something where you're probably gonna lose money, but for brand recognition, it's absolutely worth it, to keep people engaged with the brands, and come out of the online world and have a physical presence. Um, do we think it's top 3 questions at the moment? Because they're opening, I guess technically they're opening in November, which is Q4. But I did say and beyond in the
Nice.
opener. You
Um,
think this makes it, or do we want to replace it with something else?
I would swap it out. I would ask about video games, which I
oh,
also don't
great
think are
question.
doing that much for them
Okay.
at the moment, but they've put a lot more money into that and more emphasis.
Yeah.
So, my question would be, how much revenue are you making off video games, if
Mm,
anything? Like what justifies the continued push, and what do you see as the long-term strategy? Because that's a
Yeah.
different market than the streaming video one, but yet one that they are kind of dabbling in.
yeah.
I would love to talk about this a little bit. You just said like my activation phrase because I had a brief obsession with Netflix's video game business, and yeah, I don't think it seems to be going very well. And I think mobile games maybe make more sense for Netflix than some of the other games produced by studios it has acquired that have a much longer and more unpredictable production time. These seemed like very costly investments for Netflix to make to get into this space. And I think the economic model for big video game production just doesn't sync up with the quarterly revenue focus and advertising focus that Netflix seems to be taking now.
Hmm. All right, we're swapping out Netflix house for its gaming business. How much is Netflix making from its gaming business? How's that going? All right, I've got one more for you guys. Talking about their new partnership with Spotify. So our briefings analyst again, Marissa Jones, writing that Netflix is making its first big move into the podcast business in a deal with Spotify that will see the popular streaming platform showcase a selection of Spotify video podcasts in 2026. Ross, how much will how much will Netflix's new Spotify deal move the needle for Netflix in particular out of 10?
3 out of 10 at best. This is a bigger deal for Spotify, in particular for the Ringer portion of Spotify, but it's not. I don't think it's that big of a deal for Netflix. This isn't exclusive content to Netflix. You can already watch or listen to all of the Ringer podcasts elsewhere for free if you want to. And shortly after they made this announcement, there's a free channel of these podcasts from Spotify being made available on Samsung TV Plus. So, like, video podcasts to begin with are very hit and miss. I don't know how many people like want to watch other people talk. If you're
What are you doing?
watching me on YouTube right now,
Yeah.
God bless you. You're one of 75 people.
It's not, it's closer to 80, but that's
Okay.
round up.
But I just don't see this being a main type of content that Netflix viewers gravitate to. I think it's awesome deal for like I said, The Ringer, because they can get an audience extension out of this. They're on Netflix now. They're on Samsung TV Plus. I'd say the bigger deal for Netflix is partnering with creators or other types of content producers that aren't traditional studios. They're making content they're getting content for cheap here. If you're just taking a podcast that already exists and put it on your platform, that doesn't cost you a whole lot of money. If you're taking YouTubers videos that already exist and repurposing them, that's not going to have the licensing fee that like a giant, Warner Brothers or Disney movie has. And they have been doing more of that. So they have been changing the types of content, and this is indicative of that. So it's part of a bigger trend I think matters, but this particular deal I don't think matters. Spotify's done a bunch of video announcements in the last decade, and very few of them have lasted.
Real quick, are you surprised that Spotify would be interested in helping Netflix get ahead or get into the podcast space?
No, because I'm not surprised, because like I said, I think this helps them expand the reach of those podcasts that they own. I don't see it, I don't think it's gonna like drive time spent on Netflix by like, several percentage points or something like that. I think it's driving the if you're looking at like the change in audience, I think it's gonna change the audience of the Spotify podcast more than it's going to change the audience of like total Netflix viewing.
Okay.
Yeah, I sort of agree. I think, I would give it a similar score, maybe around like 4 to 5. This definitely has more of an impact for Spotify than for Netflix. Spotify is under a lot of competition from YouTube right now in video podcasts. I think it's feeling a lot of investor pressure about slow ad growth. And, the Samsung TV deal are a way for Spotify to show that we are tapping into video, which is, some of the best ad inventory, and we're trying to compete with YouTube. Like, we're the audio company, but this video platform is gobbling up viewership for video podcasts. So I think, yes, it has a bigger impact for Spotify, but I do think that video podcasts are not like, say, a movie or even a TV show. I think that it can be more akin to like a comfort watch, like a Netflix
It's much more
viewer
passive.
putting on. I know this is no longer on Netflix, but Seinfeld or something while they do the dishes or fold laundry or whatever. I think a video podcast fills that same function where you can listen, but when something that signals visual interest happens, you tune back in on your screen.
Oh.
Yeah.
So I think
I'd say a podcast does the same too.
well, without the video component.
Yeah. Like if you're just going in and out, not looking at the screen, then what do you even need the video for?
That's true. I suppose
You can just
you
go
need
on
video for it.
Spotify and have the background, screensaver background if you want.
If you're a platform, I guess the video just helps you sell that space for
Yeah.
more money.
Folks do
Yeah.
prefer, there is some research, 42% of US adults preferring podcasts with video elements, up from 31% a few years ago. They're still not the majority, but there is an interest in, especially from younger folks, in that video component. But whether it fits with the Netflix audience is another story entirely. All right, so top 3 questions for Netflix and Q3 I have down. A lot of questions around the ad business. So I think that's one. We swapped out Netflix House for the gaming piece. So how is Netflix's gaming initiative going? And then finally, it seems less about the Spotify piece and more, Ross, to what you were saying, more a focus on kind of bringing in creators into the fold and helping them come up with shows and garner a broad reach on a more, I don't know, maybe brand safe premium platform.
Honestly, I would say it's necessarily brand safe. It's just cheaper to do that than to.
I think that's something that Amazon has also had great success with. I mean, look at the Mr. Beast show. That's obviously a more expensive production than, getting your average YouTuber over, but that's a personality that was, born and raised, so to speak, on YouTube and inked a deal with one of its competitors. So there's an opportunity for Netflix to slide in there. If I could propose a replacement question for number 3, sorry, Marcus.
No, go ahead.
And I'm going to propose that we replace you right after this. So
Wow, there's a lot of proposals
already in the works.
Is the potential for Netflix to be involved in a carving up of Warner Brothers Discovery. There's been some reporting that there are kind of competing ideas among the two co-CEOs of Netflix about whether or not Netflix should get involved in this. WBD is obviously interested in a potential sale, and if you're Netflix, all of those really big tentpole franchises that Warner Brothers Discovery owns the rights to have to be of interest, right?
Yeah.
And not just for future productions, but also for the backlog of existing, let's say DC superhero movies, just to name one example of like a prime property that it owns. So if Netflix can get in on that and expand its content library even more, I think that would be a really significant addition to its portfolio, and it's something that I'm very curious about and watching.
Some huge franchises, yeah. Harry Potter, Game of Thrones. Ross, I mean, I wasn't sure how seriously to take Netflix's interest in the company.
Netflix doesn't want the whole company. If they can get the part that they like without having to take the TV networks,
right,
that would like be so much more attractive.
I think it makes the list. So ads, gaming, and WBD, all the biggest three questions we think for Netflix at the moment.
And I will be the new host of Behind the Numbers. That
is also true, which I'm just now finding
three questions
out about. Tune in to Danny and the show next time to talk about all the other tech giants and what the biggest questions at the moment are for those guys. But this is all we've got time for this episode. Thank you so much to my guest. Thank you to Danny, my replacement.
Thank you. Always a good time.
And to Ross.
Thanks, Marcus.
And to the whole editing crew and to everyone for listening to Behind the Numbers, the marketing video podcast made possible by Nielsen. Susie will be here on Wednesday hosting the Reimagining Retail show.